So Trader Society is now approaching nearly 1,500 members within our organization. With that being said, we have reported so far collectively as a whole, as a team, we now have over $2 million in people worth of swing trading call options. I'm going to be explaining to you on why I'm going to be swing trading over $150,000 in 410 strike call options, and the expirations I'm going to be going with is June 2nd and May 26th. The short-term one is the more riskier one, higher reward. With that being said, let's get straight into it. So in terms of our swing trade, I took my starter position at 410.70 and then I added heavy at 410.10. If we go to 409, I don't think it's going to happen, but if we do, I'm going to be adding even more before the close. Now, why are we all swing trading call options? I'm going to explain to you why. The strategy is called a gap close reversal to fill the gap above. So you can write that down. Now, in terms of the daily chart, I'm going to show you a recent trend, a recent pattern on the SPY that has occurred. So you can see right here, SPY had heavy support at this level, and this is the previous closing price. So this white line represents where the SPY previously closed at. You can see on this daily chart, each candlestick represents 1 day's worth of price action. It opened up higher than it previously closed. So there's a gap, there's empty space waiting to fill at 404.36. So the SPY ended up trending up higher for 3 days straight, and then it dropped right back down, having two gap downs. It had a gap down here, it had a gap down here. Once it filled this gap at 404, that was the exact bottom. And then it closed at 405.13. And then the next day, it had a massive gap up. So the point is, once this gap filled, it had a reversal. And then it started to trend back up to fill this gap that was waiting to fill above. And if you look at this pattern, and if you look at what is occurring, the same exact pattern is starting to occur. And I'm going to explain to you on what that is. So there was a gap to fill right here at heavy support. This is where a major bear trap was created at $410.25, right? So there's a gap to fill at 410.25 right here. If you look right here, within our key level section within Trader Society, I clearly stated 410.25 is the bottom of the channel for the gap fill reversal, best level for calls. Also, if we form a bullish candlestick on the daily chart, you're going to want to swing calls. So if you look at what's happening, the same thing is already happening. It's having the bullish reversal at our best level for calls, and it's already trying to kind of close with this bottom wick. See how it's trying to form a wick at that 410.25 level? So the same thing is attempting to happen. Now, it's still fairly early in the day. We do have 3 hours left, so it can close at any price, but the price is right, and I like it, even though it's lacking, some sort of bullish confirmation on the daily chart. I like this overall play, and I'm going to be going with it. Now, if you look at the pattern, we gapped up from 410.25, and it created a massive bear trap. We spiked all the way to 420.45. And if you look right here, once it formed this doji, you see how it did the same pattern, right? So there was a bear trap right here. It gapped up. It formed a doji right here. It formed a doji right here. Big sell-off. Big sell-off. Once it filled the gap, it had a reversal. Once it filled the gap, it's having a reversal. So those are the reasons on why we're deciding to swing trade calls. Now, this is something that I do want to bring awareness to. If I do lose on this trade, I'm going to be sizing double. I'm going to double up my size at the lower level. So this is the one and only downside that I'm seeing to this potential trade where it cannot work out. So, if you look at this pattern, it had so it formed the doji, right? So just look at this, man. It formed the gap up. It went up for 3 days straight. It formed the gap up. It went up for 3 days straight. It formed a doji. It formed the doji, and then it sold off for 3 days straight. And then it sold off for only 2 days straight. So it could sell off for one more day. It's definitely possible. And there's also a gap to fill below at 405.27. So the other theory is, if this doesn't work out, we're going to sell off. We're going to start to fill that gap at 405, and then that will be the level where I went even heavy. I would put in at least $250,000 into call options at that level in swing trade. That would be the true best level. But what I'm telling you is, if you want to, if you want to try it out, you can try it. I like how the overall trade is setting up. The price is right. It seems like just too big of an overreaction to go from 421 all the way down to 410.25 in just 3 short days. So in terms of this overreaction, it went from 417.60 all the way down to 404 in about 3 days, 4 days. So if you do the math, that's about a 13-point drop. It had a 13-point drop from the exact top. Right now, from the exact top, we are sitting at basically a 11-point drop. So it's not the exact same. We can. And another thing to bring awareness is it can happen at 408 as well. I just noticed that there's a gap to fill at 408. So there's a gap to fill at 408 right here. And there's also a gap to fill at 405. If it doesn't happen at this level, the most likable outcome is it reverses at 408 or 405. So you can go with like further dated expirations, and then you can just kind of, you can kind of sit on those calls for a little bit, and you could take nice size at 408 and you can add at 405. But these are the ideas that I have for you, man. This one that we're in now, I would say this is more high risk, more speculative, not 100% the best. In terms of day trading, it worked out perfectly, man. I had the perfect plan for day traders. I told the day traders the best level for calls was to buy at 410.25. It was literally the exact bottom. So many people banked off that level. A massive bear trap was created at 410.25, where we spiked to a little bit, nearly $412, right? So in terms of this swing trade that I'm pointing in your direction, it's pretty good. It's not 100% the best, but it is pretty damn good based off that pattern and trend gap close reversal that I showed you, right? So just understand, if it does not work, I'm going to be doubling up my size. I'll get stopped out. So I'll get stopped out. I'll take my loss. I'll be doubling up my size in between the range of 408 to 405. So if you're watching this video and you like the trade idea, you can take it. Or if you want to play it safe, you can miss out on this trade idea, and then you can hope that it goes to 408 to 405. No worries, right? Just understand, if this doesn't work out, it should work out at 408 to 405. So, this isn't made for you to blindly follow what it is that we're doing. I'm just explaining to you on what it is that we're doing, and then you can use this information however it makes sense for your account size, for your situation. So like I said, it's a fairly good trade, man. It's a fairly good swing trade. There is a little bit lack of confirmation. There's plenty of time left in the day. It can close at any price, but you can see it's already wicking like it did last time here, already wicking like it did last time here. Another thing I like about this as well is it's very likely that we go back up to 412. There's this top wick to fill at 412, plus we have the gaps to fill above as well, but it's very likely that we go back up to 412 because it just has to go back to that wick. Look at this pattern, man. You can see right here, see how it forms that wick, that top wick. See how it forms that top wick. It retraces back to the top of the wick, then it starts to drop again, right? So I'm just seeing very bullish signals for a move back to 412. I'm likely even going to shave some off at 412 because, like I said, man, this might not be the bottom. If this isn't the bottom, then 408 to 405 zone is 100% the bottom. So you take nice starters at 408 and then you add the rest at 405, you ride those out, and then you sell into a 410 spike. If this is the bottom, we're going to be looking to, take some profit at 412. If it is today, I'll likely just take some profit at 412, right? You got to be in the Discord to know exactly what it is I'm doing in real time. If we hit 412 today, I'm likely going to be taking a lot of profit and then leave some runners on for the swing trade because that's a very nice profit return. And plus, it's a little speculative and risky to swing trade this because, like I said, it could go 408 to 405, and then that would literally be, like I said, man, if calls don't work here, it's like they have to work at 408 to 405 zone. But we should be able to retest 412s. We'll see. And we have multiple gaps to fill above. So, overall, it's a fairly decent trade. That's what it is that I'm showing you. So in terms of this pattern, the only difference really is it dropped about 13, 14 points last time. Right now, we only dropped about 11 points. So it could drop 3 more points to 408, or it could even go to 405. But that's the main difference that I'm seeing. Also, in terms of last time, it was basically 3 days to the bottom. Once it formed the doji, the third day was the bottom. So this is the doji, 1, 2. So it's not the third day yet. So if this isn't the bottom, then tomorrow should be the bottom, and I will be targeting calls heavy at 408. If we do go to 4012 into the close, I'm likely just going to take a lot of profits and then maybe just swing trade some runners. Nothing too crazy. But the best thing you could really do, if you want, you could take some small starters as like, more of a speculative YOLO type of trade. But the best thing you can really do, man, just go heavy at 408 and then add at 405. But overall, it's a decent idea, and I explained to you what it's lacking and what it has going for it. If this is not the bottom, then 408 to 405 will. I'm in a situation, man, where it's just like, if this doesn't work out, it should work at 405 to 408. I'll make it all back and more with my sizing, right? So if you wanted to do it and you have a small account, maybe you do 1 or 2 contracts here. If it doesn't work out, you get stopped out. You do 2 to 5 contracts, 3 to 5 contracts on the next one, right? But that's what I would look into. That's what I could recommend. You can also utilize this information however you want to use it. Basically, my thesis is we could go lower, and if we do, it's likely going to bottom at 408. If we drop to 405, I would just add. I would hold through that, and I would literally just add likely. And you don't have to do that. If you're in at 408 and you get stopped out, you can just get in at 405, right? But basically, 408 to 405, that should be literally the exact bottom if this is not the bottom, in between that zone. And I would value this at 412 to 411 if we did go to 405. Now, if we bottom here, I would value this at 414. That's my overall thoughts. That's my overall analysis. I will see you guys within the next lesson tonight.